if you're a typical service worker, so we're talking our servers, our bartenders, our hairstylists, things like that, people that who receive tips and have traditionally been in an industry where tips are normal, we now have a provision just for 4 years basically called no tax on tips. How does this look in practical life? Well, these tips have to be first off reported. So that's why I think it's important to understand that if you had traditionally not been reporting your tip income as income, that is not correct. You're supposed to receive that and report it as income. Now, if you report it as income and receive it as income, you'll still pay the additional Social Security and Medicare on the tips, but you're going to be able to deduct up to $25,000 of those tips off of your tax return. And that's going to be what we call an above the line deduction. Why does that matter? Well, it matters because some people itemize and some people don't. If you get a deduction above the line, above that line of itemization, as we kind of call it in the industry, that means that you're going to get this deduction even if you also get the standard deduction. That's important because that helps a lot of people who maybe aren't going to itemize, but they're now going to also be able to take this no tax on tips. So this is an above the line deduction. It's going to come in before we start talking about our standard or itemized deductions.